Hi, welcome to Trading with TK, teaching you to turn ideas into money. We're at www.tradingwithtk.com, and today's Wednesday, June 4th. Market had a good rally this morning, at least the NASDAQ stocks did. They ran them right up into resistance, which we thought was a possibility, but there's just too much stock up there, and late afternoon, early afternoon, they started to give way. And the day ended with the sell-off only about halfway done. I think we've got some more work to do on the downside. But there's clearly a disconnect between the Standard & Poor's and the Dow and the NASDAQ. And I think the reason for that is, new money comes into the market in the early part of each month, as we discussed in my weekend question and answer period. And the money managers are afraid to touch these financials. They just don't act good. There's rumors running around about Lehman and some other firms, and there's just some more problems with these financials, and it's an important segment of the market. If the financials don't act well, there's something not right. So there's always a warning when financials don't act good, and trust me, they don't act good at all. So their money managers are putting the money to work in the NASDAQ stocks. I guess they feel it's a safe place. That might explain the rally today. I don't know, but it's my explanation. Not that we need to know why, we just need to know that it happened. Okay, but we'll take a look at all that in our final segment when we look at the major indexes. As always, I got a new idea tomorrow. I almost feel un-American with this recommendation. When you hear why, you'll understand. After we do that, after we give you that, I want to take a look at the stock we sold short this morning, ONN, do a follow-up on that. But without further ado, my idea for tomorrow is on the short side, and it is the fat lady, Apple, AAPL. In just a moment, I'll show you the chart, and I'll show you exactly how we're going to take this idea and turn it into some money. Now, don't go away. I'll be right back. All right, we're looking at a daily bar chart of AAPL, Apple. This is a call on the short side, and tomorrow we'll be looking to sell the stock short between 185 and 188. We've got a target on the downside of 120. And for those of you who like to use stop orders, I guess around 193, if it broke out above this whole high here, that might be a reason not to stay with the trade. Although I believe this trade's going to work out pretty well for us. Okay, I'm going to zoom in and I'll give you a little history on the stock. First of all, when I first started my webpage back in March, this is one of the first stocks that we recommended. We bought the stock at 125, and we sold it in here somewhere. We didn't carry it all the way up, but now that it's up in the resistance area, we think it's time for it to roll over. Let me zoom in. I'll show you what we don't like about it. Okay, what I'm calling this is the opposite of the breakout, pullback, go scenario. This is more of a breakdown, kick back, and then go. It's the opposite. If you turn the chart upside down, it would be a breakout, pullback, go, and now it's just the opposite. We've got resistance right here. That's our resistance. You can see as we broke down, as we came back, couldn't get through it, and now we're starting to roll over here already. As a matter of fact, this is already starting to look like the beginnings of the makings of a little descending triangle, so to speak. So that's my picture. That's why we don't like the stock. And let me recap that. That's AAPL. It's a call on the short side, and I think we can make $65 on this trade. You got to remember, it's a $180 stock. Okay, let's take a look at ONN, the stock we sold short this morning. Okay, I got this off at a little bit earlier than I probably should have, but I sold it short at 958. Still holding this descending triangle. Still has this head and shoulders look to it. This being the head, this being the left shoulder, this being the right shoulder. So I'm pretty confident this stock's going to roll over. We'll put that into our portfolio. And this is our target down here, 680 to cover the short. Okay, nothing in the winners and losers because we haven't sold anything. But let's take a look at the major indexes. and see what we've got. Now, I remember I told you there's a distinct difference between the Standard & Poor's and the Dow and the NASDAQ. The Dow is much weaker technically. The NASDAQ technically has not actually broken down yet. I'll show you what it has to do that. But first of all, let's look at the Dow. We'll walk through this again. When it broke that low right there, that was the first sign of technical trouble. Then as she kicked back up into it, ran into resistance, because that now becomes resistance, as you can see, and then it breaks down, makes a lower low. So it's clearly, so every time it rallies, it's not going to make, it's going to run into resistance right in here. I don't even think it's going to get there. But clearly we think it's going to work its way down here to the old low. Now, I don't know if it's going to break it or not, but the call is for a test of the old lows. We think that's what looks reasonable, and it's something we can visualize. Not only that, we've got a pretty severe trend line coming down too here on this Dow, as you can see that. That's why I'm saying if they rally, I don't think they're going to get very far. Okay, let's take a look at the transportation average. This is still working on this head and shoulders pattern. Left shoulder, right shoulder, head. This is the neckline. Actually, this spot here has to get broken before you can actually say that technically the whole pattern has been broken. But it's set up to do it because it's this huge head and shoulders pattern. I would be very surprised if it didn't play out the way it's supposed to, and that's to the downside. I'm going to take a look at the SPY, which basically represents the Standard & Poor's 500. Here you see that old pattern with that head sticking up. Most of our indexes have this look. It's a bearish look. And you can already see where the damage is already being done on the downside here. Show you some resistance here. Resistance there. And resistance off of this old low right there. So you can see how it's working its way down. Also, we think it's going to test its low. QQQQs, strongest of all the group. Has been since March. Here's our resistance right here, and you can see we've gotten back up into it, and it technically is not going to be a broken chart until these lows get taken out. I think it's going to happen, but it hasn't happened yet. Now let's take a look at the hourly and get an idea as to what we can expect tomorrow. This was the rally we got today. I thought it was going to get to this high, and I got an email and they said, oh, because it went above, does that mean it's going to keep going? But you always have to give these little charts a little wiggle room. Just because it's an art, it's not a science. It's not one specific price. If it does this, then that happens. It's an area we're looking at. Anyway, you can see it ran into trouble up there and it broke down. Had a little bit of a kickback the last hour, but I think this pattern, the way it's set up here, that we're going to do some more work on the downside tomorrow morning or sometime tomorrow, because I don't think this pattern is complete. I think we want to get down into here somewhere, or at least to this old low again. But I expect to see some weakness tomorrow. Okay, so that's my view of the market. Until tomorrow, this is TK signing off.